Hey guys, I'm Kayleigh Eldridge and I'm with Keller Williams Realty of Central Oregon. And I've brought in Sarah Saraceno from Guild Mortgage. And we're going to talk today a little bit about first time home buying and things that you may or may not know, but definitely important things. So, Sarah, you work for a standalone mortgage company and not a big bank. What's the difference between the two, the pros and the cons?
That's a great question. So when you work with a lender that's a big bank, it's going to have a big difference because that person has banking hours and they've got a ton of clients on their plate. So customer service might be there, it might not. When you have questions about certain properties at 10 o'clock on a Saturday night, your banker is not going to answer their cell phone and be able to run numbers for you. And oftentimes in this market right now, with how crazy it is, that house is going to be off the market and pending by the time Monday comes around and the bank opens up. So it's a little bit more of an inconvenience to work with a bank over a personal lender.
A little bit more of a personal relationship there. What would you say, just in general, some good information for first time home buyers? What's some things that they should just know going into it?
Awesome. So you're thinking about buying a house. I don't know, Kayleigh, are you just licensed in Oregon?
I am just licensed in Oregon.
Okay, so you're thinking about buying a house in Oregon. A couple of things you want to think about. You want to be able to watch your credit on a program called Credit Karma. Is a great one. They're free. It's a soft pull. It's not a hard pull, but it gives you a really good idea of what your credit scores look like. Things you can do to build your credit. You want to have 2 or 3 trade lines. So at least car loan is a good one, or student loan if you have those, and then revolving debt, so a credit card. It could even be a secured credit card. They do the same thing. They both build your credit the same, and just make sure and utilize your credit cards. Don't go over 30% of your card's limit. So anytime you go over your card's limit of 30%, then it can actually harm your scores. So just using your credit card, but using it small amounts. That's what's going to really maximize your credit. Obviously, no late payments and not a lot of debt. So don't go take out 10 credit cards thinking that it's going to build your credit 10 times more, because that's not necessarily the case. One credit card would do the trick. And then for income, if you are self-employed, you want to make sure and have a 2-year work history on your tax returns. So tax returns reflecting 2 years of your self-employed earnings. If you're self-employed, try not to write a bunch of stuff off on your taxes, because we take the net income and not the gross income. So that's a big key factor if you're self-employed. If you're a W-2 wage earner, you do want to have a 2-year history. It doesn't have to be with the same company, technically not even the same line of work. So there's a lot of flexibilities around that. And then wage earners are pretty cut and dry, easier to work with for sure in terms of getting a pre-approval lined up. And what else? Down payment. So if you are stressing about a down payment and you want to have 20% down because that's what you've heard is, oh, I need to get 20% down to avoid mortgage insurance. That's a big myth out there. So like, you don't even need to have any money down. I'm going to say it again, no money down. That's crazy. So there's a lot of
That's good news.
Yeah, it's great. So there's so many options out there, different loan options, especially with lenders similar to Guild that offer 0 down programs. But I mean, a down payment of at least 5% would be good. I mean, it doesn't hurt to have some money saved, especially in a situation where you might have to cover your closing cost. Maybe Kayleigh can't get your sellers to cover the closing costs, so you guys would have to cover them yourselves. A nice little cushion of probably $5,000 to $10,000 is great. But if you don't have any money, that's not a deal killer either. So really, it's just about sitting down with a lender, knowing that there's that big fear of, oh my gosh, I'm going to get declined. Like, how embarrassing. I don't want to just have that flat decline in my face. But that's not really how it works. Say that again.
Just that straight no. I bet a lot of people just feel that they can breathe after hearing that. I know
Yeah. I mean, that's gotta be, it's scary because you want to get approved and it's an emotional process. I mean, it's a big investment. So if you get shot down, it takes the wind out of your sails a little bit, but I here at Guild with us and our team, we don't decline anyone. If it just means you're not approved at this time. And so we will work with you on step-by-step instructions on what you need to do. We'll follow up with you. We'll make sure that you're on track. If things happen, maybe you lose a job due to COVID, or you had to relocate somewhere else and change jobs. So like if things happen, life happens, and we get that. So, I mean, it's just about working with your lender and having them really guide you through step by step on how to find success and how to get that approval. So it's really starting by establishing that relationship, letting us know your goals, and allowing us to help you get there, really.
I feel like the whole process, guys, is building a trusting relationship. You're going to start with a agent, and you want to know, it might not necessarily be the one with like the most sales or, the biggest background, but you want to have somebody that you feel has a trusting relationship with you, and you have confidence, and you know that they're going to help you, because it's a huge investment and it's a long road, possibly. There's bumps sometimes, but if you have that trusting relationship, they're not going to give up on you. There's the bump in the road, but we get you through it.
Yes, I love that. So an analogy I've actually used before to clients with the whole bump in the road thing is I've had to warn people, buying a house in the pre-approval process, start to finish, is sort of like taking a flight trip, like on an airplane. So think of me as the pilot and know that there is going to be turbulence. That's normal, totally normal. But it's our job to land the plane safely. And same with the real estate side. Kayleigh's got to make sure that if there's bumps in the road with that property, or with the seller and the other agent, she's your pilot and she's going to land the plane safely. So just knowing that, like, it's not always easy. In fact, if it is, then you're one in a million. But it's pretty normal to have hiccups along the way, and just trust that you've got a strong team behind you that's going to get you to the finish line.
Basically, you start by knowing that it is possible, and then you build this vision, and then we're here to make that vision a reality. We can help you build that vision and make it happen.
Totally. And so one thing I do want to touch on for credit, a couple things that people are probably thinking about is, well, I have collection accounts on my credit. What do? I need to pay those off first. And I also want to bust that myth that you don't necessarily have to pay off collections. In fact, 9 times out of 10, we're going to advise you not to pay off your collection, because it can actually hurt your scores versus benefit you. And a lot of times we don't even care about them on the lending side of things. So if you do have collections, let us review your credit first. Mortgage credit pulls, they don't hurt your scores like a credit card pull would or a car loan pull would. Those are going to drop your scores a solid 30 points, maybe even more. Mortgage pulls will affect your scores probably 3 to 4 points. I've actually had my credit go up after it was pulled by a mortgage lender. So that's another big myth. People are afraid, I don't want my credit ran because it's going to impact my scores a lot. Well, it doesn't for a mortgage pull ever since the housing crash in 2007. I don't even know, because I wasn't in business back then. So yeah, that's not a thing anymore. And there's no fear. There should not be fear around having your credit pull for a mortgage. It just allows us, the lender, to review your profile and kind of guide you if we need to on how you can improve your scores. So I know other lenders that I've seen don't offer it thus far in town, because I'm friends with a couple other lenders here, and they don't offer it, but Guild does offer credit repair on our credit reports for free. And it's an algorithm that will actually guide you on what you need to pay down and maybe remove an authorized user on this account. And it gives you all these instructions. And if you do them, it actually will predict what your score is going to be. And we plug those in, and it'll do a rapid rescore within a matter of 2 to 3 days. So if you're worried about credit repair or paying certain things down, let us take a look first, because maybe what you're doing isn't actually benefiting your credit the way that you would think it would. So no harm in letting us take a look there. The other big things, I mean, if you've got a bankruptcy on your record, definitely bring that up to the lender. There's no shame in that. It's pretty common. And the windows for if you're able to lend or not is going to be different on different loan programs. So just let us know that it's there, let us know when it happened, and then that's going to allow us to kind of figure out what your best options are, or if you've got all the options available. Maybe you thought you had to wait 7 years, but that's not the case in a lot of situations. So it doesn't always hurt to ask.
I think a lot of people get scared and turn away from the opportunity because of their credit score, their debt, for sure. Yeah. Well, thank you. Is there anything else you think, like big ones?
Gosh. I think that if you're just curious on what it would cost you, like what a monthly payment would look like to have a house that you owned versus your rental, and kind of just figuring out a blueprint on how to get there, pick up the phone, give us a call. Kayleigh's going to put our information on the post. So you can call or text me 24/7, nights, weekends, and holidays. I promise I'm super friendly and no pressure here. I just want to see everybody find success if they want to buy a house.
We want to help you guys and be a part of the road, and then we're pretty young, yeah.
Yes.
we can be there for a long time. Through it all, through the bumps, through smooth sailing, through it all. So it's yeah, let us help.
Absolutely. Awesome.
Thank you, Sarah.
Yes, thank you.
All right, guys, I'll put